Hi, my name is Sunil Yadav. Uh, we will take you through how we are envisaging the solutions and conceptualizing uh, the ways and means to help our clients transform the finance function in a much efficient and better ways. As far as I'm concerned, I've been working with Mind Solutions since last 8 years into the domain of industry research and solutions for complete finance and accounting outsourcing vertical here. My primary responsibilities are to understand the requirement of a client, to ideate a solution, to work with the teams in the back end to perfect that solution, and then go back to the client and present that solution with all kind of value-added benefits that we can provide. Moving on, as far as Mind is concerned, we are a part of Mind Group. We have entities such as Mind Integrated. Mind Integrated is the one that I represent, and then we also have M1 Exchange, which is a trade receivable exchange discounting system under the license from RBI. And recently, we have also launched an NBFC by the name M2. So we have a service wing that I'm representing, then we have a trades wing, and then we also have an NBFC. When we talk about our experiences, it's been 18 years. We are into this field of finance and accounting outsourcing and HRO outsourcing end to end. Moving forward, I'm talking about very high level transformation objectives, not exactly the finance transformation objectives. But what I'm saying is that for any transformation, there are certain objectives that someone or an organization sets. They can be broadly bifurcated into predictability. You need a lot of predictability into the process, no more surprises. Scalability, which is extremely important when the organization is fast growing, and also in the situations such as we are right now in this pandemic. So a very flexible process is highly appreciated. Simplified, of course, the main function of any transformation, automation, or technology is to simplify the work, not to further complex it. Accuracy, of course, I would say how strong is the delivery, how best it is helping our clients and the employees of our clients and the clients of our clients depend upon how accurate and timely is the output. And then, of course, in the end, it all boils down to what we are adding to the profitability of the organization. When I'm saying I'm talking about anyone who takes the initiation to go through the transformation in their particular function or organization. In the end, it boils down as per us to four major pointers. One is productivity. Of course, it is about doing important that too consistently. Second is about future readiness, which is very important. If this pandemic has taught us something, then it is to be ready for what you can imagine or predict, or I would say more so for something what you really cannot predict. And then efficiency, the core of any transformation and automation. It is as per us, it's the optimum way of doing the right things, or I would say it's the optimum way of being productive. Just being productive is not enough. And then we are talking about visibility and control. It means, as I mentioned here, seeing is believing. When you see the data in front of you, when you see the analytics in front of you, which is completely transparent, driven by machine, which is the data is standardized, it is on your fingertips. You want any kind of analytics, you have it on demand. That is something that brings in a lot of belief within yourself that how your department or organization is doing. One is belief that you are on the right track. Second is ensuring that you do not deviate from that track, and that's what we call control. So controlling is ensuring, seeing is believing. When we talk about collections as a process, account receivables, predominantly I'll be talking about collections. So if we talk about India, we aren't as mature as some Western countries in terms of aligning ourselves to the credit terms. Let's face it, you have a credit term of 30 days for any customer. The customer will start processing your invoices on 30th day. whereas it means that they have to pay you within 30th day, but that's how it works generally here. A lot of follow-ups, a lot of disputes, a lot of delays in the payments. In fact, study shows the data in front of you says that roughly 53% of the B2B invoices in India are of the past due category on an average, which is highest in APAC. When you talk about late payments, 96% of the organizations are reporting late payments in their domestic B2B businesses. 55% companies hold up the entire invoice once it is disputed. So if you have 10 line items in one invoice, and if one line item is disputed out of it, then the entire invoice is on hold. If your invoice is of, let's say, 1 crore worth of value, INR, and that line item is of, for example, a lakh of rupee, but still it doesn't matter. Customers generally tend to hold complete invoice for that, and that ratio is 55%. Roughly 61% of the companies do not have a set methodology to assess how their collection department or their collection agencies are doing. Are they really adding value towards the organizational objectives? Are you better off now with this collection agency, or you were better before? So there is no, I would say there is no set methodology because of which you can really figure that out. Roughly 44% company, there are certain silver linings as well. 44% companies here are utilizing advanced reports such as collection effectivity index, which brings you collection effectiveness index, which tells you a lot about how a particular collector or a collection agency is doing in their particular accounts or areas or regions. Roughly 41% suppliers in India, they have stated, they have mentioned, and they have the willingness to take the additional measures for correcting their cash flows, be it outsourcing their collection portfolio as a whole, or be it outsourcing right from invoice submission to collections and then cash application and then balance confirmations and reconciliations. But they are ready to take those measures just because of the above 3 points that you see here, where a lot of delay and a lot of late payments and a lot of invoices are going into past dues. Now, what we are doing here, how we are helping the clients, I'll show you in a bit. First of all, let me just take you through a very typical account receivable, aka collection process. That's what we are discussing here. That how it generally works without an automation in a very typical organization, in a very generic sense. So what you are looking at your left-hand side is a very generic process. You see, this is how, just give me 1 second, let me pull up the pointer here. Yeah. So you see, this is the ERP, that is housed within your organization. From there, you generate invoices in the ERP, and then from there is somebody who prints those invoices, makes the docket ready. Or if there is an e-submission that is happening, then you are the lucky ones, I would say, or maybe email submission that are happening. So this desk is responsible for invoice printing, docketing, or even emailing them to all the customers. And then, of course, that information flows to the AR manager, and from there it flows to the team, the collection team that is in the field, meeting the customers, doing the field work, collecting the payments. Now, if you see, there is a lot of manual work that is involved once the invoices are generated. Then they go to a person who has to print them, make the docket ready, attach all the supportings swiftly and very in a very fast manner. They have to dispatch it to all the customers so that, faster you submit, of course, faster are the chances for you to collect that money within that month, or maybe even faster than that, depending upon how correct and how complete your invoice is. From there, the collector takes up the job. They meet, they greet, they call, they write emails, they go into the escalation at customer's front and get you the payment the way they are getting you now. What happens in this entire process is, first of all, smaller customers tend to not get that much importance, because let's face it, if I'm a collector and I have a certain target, I'll go after bigger accounts because the probability of me making my targets are very high if I crack some of them. Whereas smaller customer take almost the equal amount of efforts, if not more, of course, or a bit less, I would say, but they take that much effort and they deliver very less collectible amount to these collectors. So you tend not to pay that much attention to the smaller accounts. Then there are disputes, very big part of our Indian collection industry, various dispute in terms of whether the service was delivered rightly, whether the services or the product was delivered at the right place, whether the product was as per the specifications, is the invoice correct, all the supporting documents are attached or not. And let's face it, once it goes towards that discussion, then it generally takes roughly 30 days to resolve that particular concern. So if you have a 30 days of credit term for any customer, so you have submitted and you've generated an invoice on 1st of, for example, on 1st of October, you have submitted that invoice roughly by 7th of October, if you're fast enough in the manual process. And then from there, customer will take 30 days from the date of submission. So the payment is due on 7th of November. But what happens during the manual process, you generally follow up at the end of the credit term, not during the credit term. There are no very humble reminders to the customer. They are simply calls towards the end of the credit term. What happens is, let's say by 30th of October, you're calling to maybe remind customer that your due date is coming, and make sure please you pay us on time. And that's when customer gets up from the seat, start thinking about that they have to process the invoices in a couple of days. If the invoices are correct and complete, of course they will be approved by user, send it to further approvals or to finance, who will take their own time. But in case you have disputes, which I've mentioned earlier, 55% of the companies tend to hold the entire invoice for a dispute. If you have that dispute, then they're going to report it back to you in 2-3 days. So your 30 days of credit term have gone into just identifying the dispute. And then you will take another 15 to 25 days to resolve that dispute at your end, help customer understand how have you resolved it. And from there, customer will take another 30 days. So that means an invoice which was supposed to be paid to you in 30 days, once disputed, the credit term becomes 3 times as much. It becomes roughly 90 days. Other than, of course, various other things in a manual process, such as multiple reconciliation issues, such as open credits, such as inaccurate submission. There is a dearth of invoice lifecycle tracking. The only tracking you have is it is dispatched, it is submitted. After that, if you're lucky enough, if you have those Excel sheets that are being populated by your collectors with the tracking of invoices, again, that's a very big task for them. The dilemma is, should they go ahead and give you those reports on Excel, or should they utilize that time to bring that money back into the organization? So that's a big dilemma, and none of it can work without each other. Manual follow-up. There are uncovered AR that I was talking about, that most of the smaller customers go uncovered. Incorrect AR disposition, the forecast, how much money can you expect next week? How much money can you expect this month or next month? That becomes a bit inaccurate when you do not have an invoice lifecycle tracking. It's a completely people dependent. There is a lot of knowledge loss if unfortunately any kind of attrition happens in the team, since there's no system to keep that knowledge at one place. So when people leave, the account knowledge tend to leave with them. And that brings the new people, that makes the new person's job very, very difficult. And you take another 3 to 4 months to come up to that level. And by that time, the AR built up is enormous. There are missing history and records. There is no, I would say in a manual environment, there is no trail of follow-ups. There is no records of what all kind of follow-ups have happened. When was it happened? With whom a particular person spoke? When the escalations happened? You don't have that. And they come very handy while persuading a client about, why should they pay now? Why should they pay right now? What kind of efforts you have put in? And unfortunately, if a client goes belly up and you have to initiate, let's say, legal proceedings in very, very unfortunate scenarios, these records come in very handy. In the manual process, as I mentioned, very longer dispute resolution cycles. There are unstructured reconciliations and balance confirmations processes, only because the records of follow-ups, the records of submission acknowledgements are missing. So the job becomes all the more tough. There are open items in terms of unadjusted credit. There are Excel based reports. These are just reports. They do not give you information on which you can really act upon. It only piles up your inbox with a whole lot of daily collection reports or a submission report or a pendency report. Nothing of value which can really help you to make sure that if there is a miss in the target this month, why won't it happen next month? Where should you sell next? Which client should you, focus all your attention to? Which clients your sales team should help with? You do not have all that data available, and that ultimately brings a lot of delay into the collection and hence a lot of cost of collection to the company. What we do, we have developed an indigenous product internally. We call it Arise. It is an AR automation tool that automates the AR right from company setups, contract and project setups, parent and child setups, and it can also manage your master data management, which is very important. Because you do not have the right master data managed at your end, then all your collection efforts will be futile, because you won't know for sure whom to follow up with, whom to escalate to, and where to really go to talk to these customers. Arise as a system intelligently creates the queues for the collectors when they log into the system. It identifies the accounts which are supposed to pay today, tomorrow, this week, or next week. It prioritizes that list to the collectors. And how does it ensure that the collector follows up those accounts? It will not let you skip any account unless you have spoken or have sent a mail or have done a visit and put in the MOM into this tool. You have to do certain kind of activity just in order to get to the next account. So that's a fail-safe mechanism. You cannot simply skip accounts. You have to follow up on all these because these are prioritized accounts already. It captures, and that's the best part of it, it captures the invoice lifecycle management. It means it can give you at any given point of time a complete visibility into, for example, if you have a 50 crore or 100 crore of AR outstanding, it can tell you that out of that 100 crores of AR, how much of it is submitted, out of how much of that is submitted, how much do you have as an invoice submission acknowledged by the customer? How much of that has been approved by a user one or by user two? How much of it is in finance and how much of it is approved by the finance and it is in treasury? How that helps? One, it brings in a lot of visibility, clarity, and a whole lot of controls in your hands when you are reviewing the teams. Moreover, it populates an auto cash forecast for you, bases the invoice lifecycle management. It tells you to begin with, what can you expect next week and what can you expect this month and what can you not accept this month, which will come in next month. You can take that forecast, further fine tune it by talking to your collectors or your managers. You don't have to build it right from the ground. You don't have to talk to everybody just to get those forecast basis Excels with everybody, where they are very conveniently sometimes do not provide all the details. It has auto dunning queue, as I was talking about. It sends email reminders and it does not wait for the credit term to be over. It is highly customizable, highly configurable. You can customize it as per your credit term. Each customer or a client can be customized if the credit terms are different for these. And when you do that, you have the dates. You can do it on 10th day, 15th day, 20th day, and the language and the intensity of these follow-ups increases as the due date approaches. You can exclude a strategic customer. If you feel that there is a strategic customer you don't want auto reminders to go to, you can exclude that. You can pause that dunning. The best feature of Arise is an auto dispute management module. What it does, it helps you to identify or mark any invoice under any kind of dispute. It auto routes that invoice to the person who is supposed to resolve that dispute. It does that by intelligently identifying what kind of dispute is there basis your notes. and then forward that particular invoice or AR to that particular person in the company to rectify the dispute. And if that doesn't work out, it auto escalates to the next level that is available to that person. So it means at any given point of time, you have complete visibility after out of 100 crores of your AR, for an example, how much is under dispute, how much is pending with which department, and it's been how long it is pending. You can use it in multiple ways. It gives you all kind of AR analytics that you can think of. As I mentioned, it's customizable, it's configurable. It gives you 360-degree view of the AR health of your organization, which helps ultimately in the informed decision making. What all this do is this is how it transforms the receivable process. It becomes a straight through process. There is a billing quality audit that happens. That's one of our USPs, that what we do. Right after the invoice is generated, team goes through each and every invoice vis-a-vis the PO and the contract and make sure the invoice is as per the contract that you have signed or as per the PO that you have received. And all these are attached. Once that happens, the rest of the path becomes clear with invoice submission, backend C2C calling collection support, and also field support from us. And then to governing it all and making it all possible and convenient and visible, then there is a RISE, which makes sure we auto cash forecast, promise to pay creations and tracking, auto dunning escalations, auto dispute management, and AR analytics. With all this, it makes sure you get your money faster than what you're getting now. More so within the credit term that you can expect this money to come into. So this is about the AR that I was referring to. And this is how we transform it with the help of a RISE. In the end, it brings you faster collections at very, very lower costs. So this is about the AR. Now I'll quickly go into, in the interest of time, I'll quickly go into the benefits of it. It translates into 100% AR coverage, up to 95% of accurate forecast, maybe more than that depending upon the scenarios, up to 35 to 40% of lower cost of collection depending upon your age collection bucket. And it gives you roughly 10 to 35% of improvement into your DSO. And it can be more than that, again, depending upon your current AR situation. So as in the words of Mr. Jiddu Krishnamurthy, transformation really can only take place immediately. The revolution is now, not tomorrow. It's very important to think towards transforming and digitizing your entire process. And we at Mind will be happy to help you there, ideate, conceptualize the solution, and be part of this journey with you. That is it from my side. Hope I did not take much of your time. And if you have further questions or any queries about this or about any other topics that I've spoken about, please do post it into Q&A section. Thank you so much for your time. Stay indoors, stay happy, stay safe.